And we're back. How's everybody doing? Hope you are doing well. Thank you so much for tuning in to watch the video. Okay, so let's go over Wells Fargo.
Okay.
So Berkshire has basically sold out of pretty much the whole position in Wells Fargo, right?
Okay.
What are your thoughts on Wells Fargo, where it's currently trading right now? I think it's actually trading below book value.
Okay.
And Berkshire liquidating its position, and just Wells Fargo going forward. Do you have an opinion on the company?
So I don't have a strong opinion on Wells Fargo as compared to other large banks in the U.S. Wells Fargo operates under certain issues that probably make it a little less attractive, and I think definitely less attractive than Bank of America, in which Berkshire has a large stake and might want to increase the stake or something. It's kind of typical of Berkshire in terms of their selling. Berkshire doesn't normally sell something, or Buffett doesn't normally sell something because it's expensive. He doesn't really sell on price issues. He usually sells because something's changed in terms of his feelings about like risk and those sorts of things. And here it might have been culture and management and things like that probably. That would make the most sense. And also he does like to concentrate in one investment or something. So if he could concentrate more in the industry, that might be something that he would do. But it's been a very long-term investment that he's had. Mm-hmm. It's been debatable at times whether all of his purchases of Wells Fargo were so great compared to other things he could have done and other things he has bought in between, you know.
Mm-hmm. Somebody also emailed, and I guess it's probably good to talk about it right now since we're talking about Wells Fargo. We've talked a lot about deposits.
Okay.
Right. And, you know, specifically like deposits per share and stuff like that when you think about like the valuation of a bank and I guess the future earnings power. His question was how to judge the quality and stickiness of those deposits, and if that's something that you actively think through when you're evaluating a bank.
Yeah, it is. I should put out a warning here, which is that if short-term interest rates are close to zero, the value of deposits becomes close to nothing. That's interesting. Mm-hmm. And I don't know if that's a positive or negative thing or whatever, but it basically destroys the value of having sticky deposits and stuff rather than just getting money wholesale and things like that. Because if you think about it, if you could promise someone, you know, taking in a CD or something that you would only pay them 0.15% or something for a year or something, then what's the difference between that and actually having to, you know, bring in deposits at nothing? Mm-hmm. You know, your costs of having that account are going to be even higher than that. So I do look into that. It depends on things like look at the very, very long-term history. Mm-hmm. So, I mean, you know, quick FS and stuff, you can find that 20-year history. We're talking like 20 years and stuff. Look at where the deposits are coming from, who they are, if they're businesses, if they're consumers. Look at things like there's some stuff about retention rates and things like that you can look at, but also look at things like, you know, are they in particular local areas that they've been in for a long time as opposed to opening up in new places? Do their branches do everything themselves, both the lending and the deposit gathering, or do they have like loan production offices in certain places, which is a little different? And also, like, do they have multiple relationships with people in the same organization or something like that? So some banks have that where, say, they're lending to people, lending to a business, and they're taking deposits in from a business. They may also be doing business with major officers in the company and stuff like that. There's lots of little hints that you can find that way, and a lot of it comes from reading the earnings call transcripts. Mm-hmm. So, you know, it's a lot of stuff that isn't just the basic 10K stuff that you could get by learning more about reading about it. A lot of banks do presentations and things. They have a lot of detail on that, and they'll give you ideas about their kind of strategy. They're usually focused more on one thing or another. So focus on a particular local area. You can learn a lot about that. Focus on like business or consumer side of things, or focus on certain industries and stuff. Some of them are focused on that, and they have more of a history in that area, you know, both on the deposits and the lending. It's usually pretty weird if their deposits are from something totally different than their lending. It happens sometimes. We've talked about Frost before. Frost actually has a meaningful amount of deposits from households and doesn't lend to households really. But usually, like if you're doing a lot of lending to energy companies or something, you're also taking in a lot of deposits from that industry. You know, that would make more sense usually, or like from the same local area.
Got it. Cool. Thank you so much for tuning into the video. Make sure you hit that subscribe button. Check out the app, www.focuscompounding.com/app, and we will see you in the next video.